Has the used car bubble burst? Hey everybody, today we're going to talk about the high automobile prices for new and used cars. We're also going to get into some broader economic updates and data here today. If you haven't already, please make sure that you are subscribed so you can get these updates on a daily basis. So let's get into today's dose of economic reality. Well, let's see what's happening with car prices. Recent article out of Quartz, the used car bubble has burst. So Quartz is not questioning, has it burst? They're saying that the used car bubble has burst. Well, why are they saying that? Let's go ahead and take a look at some of the data presented in this article. Now, first of all, they're pointing to the U.S. Consumer Price Index, indicating that it only went up 0.5% in July. We know that number is very, very misleading. Right, we've talked about the CPI many times on this and how it excludes a lot of things that most Americans have to pay for. So I won't go back into that today because I think most of you have heard that on this channel several times. But what they're pointing at is, as a bursting bubble, is the price index for used vehicles, which only rose 0.2% in July, after rising or having risen 7.3% in each of the previous months. Well, here's something to think about. A bubble bursting means prices are falling. It doesn't mean that prices stop rising, right? So prices rise very quickly, and if they continue to rise only more slowly, that is not a bursting of a bubble. So I'm not sure why they headlined the article, "The bubble has burst." Now, if prices start dropping and going into negative growth, meaning falling prices, then you can start saying maybe the bubble has burst. But who knows? Prices could next month come in lower, and that could be an indicator. But there's some other things too that are going to keep car prices propped up. And we already know the bank and the lending system plays a major role in the prices of not just cars, but the everyday cost of living, pretty much everything. Credit cards, borrowing, you name it. But take a look at this recent article here regarding Toyota. And this is out of BBC. Chip shortage, Toyota to cut global production by 40%. So what happens when there's less cars to buy? The demand for cars increases. Or I should say the demand that's already there for vehicles is going to be funneled now into a smaller number of vehicles, and that's going to equal rising prices. So I'll come back next month and hopefully report that car prices have dropped. I know a lot of people are holding back, waiting for some sort of deflationary event in many different markets and in cars and homes. And a lot of people that are holding some cash would like to see deflation and falling prices. So we'll have to keep an eye on it, but it doesn't look too promising that we're going to see lower car prices very soon with a company like Toyota, 40% production cut. That's a big cut. And this has to do with chip shortages. And also from this article, Volkswagen, the world's second biggest car producer, also warned that it may be forced to cut output further. We still have not got enough chips. The chip shortage has not been fixed yet. Sure would be nice if we made chips and more products here in the US, wouldn't it? You see, that's another problem when you have a high cost of living. Companies do not want to manufacture in your country because then they're going to be pressured to pay higher wages to match the cost of living. So what do? They ship the jobs overseas to where the cost of living is lower, where people will work for lower wages. Some people will say that's capitalism, some people say that's business, but regardless of what you want to call it, that's the way that it is. So the solution to all these rising prices in one area is you got to look at the whole picture. The cost of living needs to come down. Wages don't need to be as high. Companies will want to manufacture here. Of course, we need lower corporate taxes to compete with the rest of the world, and lots more that we could talk about on this topic. But bottom line is, I don't think we're going to see a bursting of the car price bubble or falling prices anytime soon. If they do fall, I'm going to guess it's going to be less than 1%, maybe 1 to 2%. We'll have to keep an eye on it for you. All right, let's transition a little bit here. Let's talk about the CNBC article. 61% of Americans paid no federal income taxes in 2020. So we've got roughly 40% of Americans that are supposed to pay for everyone else. How does that work? right? People still believe the illusion that the working class is going to be able to pay for all these programs, all of the spending, all of these handouts and payouts, all of the debt. It's never going to be paid back unless it gets printed out of thin air and they don't add it to the debt. They just use the newly printed money. Let's say they print a $100 trillion coin, which technically they could because it's not backed by anything real. Print that and use that to pay off all the debt. Therefore, you wouldn't be adding to the debt. But no, this money gets all borrowed into existence. So no, the 40% is never going to be able to pay off or to pay for the rest of the population. But yet that's what they want you to believe. You see, the system takes never-ending amounts of debt and market propping and money printing and market support to keep it functional and operational. Take a look at this chart right here. You remember many, many years ago when QE started, it was QE1. We see that lasted about 60 weeks. And we look at the yellow line, QE2 came out, that lasted close to 80 weeks. And we look at the green line, QE3 came out, that lasted, looks like about 120 weeks. And we're well into QE4 now. And the amount of this QE is surpassing all of these previous QEs. And it's my guess, if the trend continues, this current round of QE is going to be QE to infinity. And it's going to exceed 120 weeks like we saw in QE3. And unless they pull back on this type of market support and stimulus, you're going to see rising prices continue to go higher and higher and higher. And add to that the chip shortage, supply chain disruptions for food and various goods and services, and it's nowhere to go but up for prices. Now you will see some prices that really jump up quickly, like we saw it in cryptos here recently. They jumped up to 60,000 and pulled back. I should say the main one jumped up to 60K, pulled back to 30,000. We saw it in lumber. So you will see little booms and busts along the way. That's called volatility, but long-term trajectory is higher for prices. So you definitely want to continue to brace yourself for a higher price environment. Let's wrap it up here with housing and talk about the housing bubble. This is out of Reuters. U.S. home building stumbles amid unrelenting supply constraints. So we have, again, all this demand and not enough production to keep up with demand. Ultra low interest rates. Institutions coming in and buying homes like never before. Bidding wars, it may be cooling down in some areas, but overall prices are still going to continue to rise. Nothing's being done to prick this bubble. They need to drastically raise interest rates or stop letting the banks loan out money that doesn't exist. Stop buying mortgage-backed securities. They need to do something to reverse course. Otherwise, it's up and away continuous for prices. Wish I had better news for you. If you're somebody selling your home or somebody making money in this bull run, then this is good news for you. But if you're someone sitting in cash waiting for prices to become more reasonable, it's not good news. I wish I had better news for you, people that are waiting in cash. But that's what's happening right now. Thanks everybody for being here. Stay well, stay safe, stay prepared. Bye for now. Peace.